Hey guys, welcome back. Here's another video of 3 Blind Monkeys spread betting. We learned a little bit about trend lines in one of our previous videos, and I think by how things are looking, there's more lines to learn. So let's go over to Cornish. Cornish, what have you got for us today?
Well, today we're going to be having a quick little recap because I want to make sure that you're learning everything as we're going along and that you're actually retaining it, because I know Mr. Cranny's got a problem with retention somewhat at times. And I want to try and get you trading, but if we're going to be using £1,000 of your money here to be trading, I want to make sure that you've got a reasonable idea of how the market goes. So very quickly, if you have a look at the screen in front of us, can you point to a trend line for me?
Yeah, there we are.
It's very, there you go. And what type of trend line is that, Mr. Cranny?
That's normal trend line going upwards.
It's going upwards. So what do we call an upward trend line?
Bullish. That's the one.
That's it, bullish. The easy way to remember that is bulls thrust their horns upwards and bears close their hand downwards. So point to me to a bearish bearish trend.
A bearish, that one.
That's fantastic. And point me to a sideways trending market.
It's the horizontal one.
That's right. Okay, fantastic. So as we explained in the last video, just very, very briefly, we use these trends to try and work out which way we're going to trade on a specific day. So we would look to see if the market's trending up or trending down. And if it breaks through that market, if it breaks through that trend line, then we would trade a breakout. If it doesn't...
Do you normally do this every time you do something in the morning, do you?
Yes. Every time I do something in the morning, the first thing I do is look at the last week or so. Sometimes it's not helpful to look at months because, you know, it's way in the past. But sometimes it can be. So I always start off with the 4 monthly or the monthly, then go down to the daily and have a look at the overall to get the overall picture of which way it's going. And you need to work out which way you're actually going to bias your trades. Okay. So if once you've realized that you've got to put a trade on, whichever way, then you need to work out when to trade, because as with everything, it's all about timing. And the way we do that is with a little bit of magic called candlestick patterns. Now, I have explained this to you before very, very briefly, I believe, but the chart that you're looking at is different to a normal chart. It's not a standard line graph that you might use. It's a candlestick chart. It was invented by Monashima Homer or something like that in Japan. And essentially, what each candlestick is, let's have a look at this here, is a graphical representation of price movement over time. So I've I've zoomed in here to a larger version of the candlestick so you can get an idea of what I mean. You need to know this at this point for the simple reason that we're now going to be talking about candlestick patterns. And candlestick patterns create the trigger that we will use to enter a trade. So you've worked out which way the actual market's going to go. You've worked out which way you're going to bias your trading, whether it's a bullish or bearish, whether it's going to be up or down. Next thing you need to know is how to enter the trade. So a little bit about candlesticks. When you look at this candlestick here, you can see it's got a big green body. This is what we call a body, and 2 little protuberant bits on the end, which we call wicks.
So I understand that the wicks is where the actual candlestick has gone up to and as far as it's gone down to. That's
right. So we've got this set to a 3 hour here. So this candlestick represents 3 hours of price movement. The top and the bottom of the main body of the candlestick are the opening price and the closing price over that 3 hour period. And
that's over there, isn't it?
Yeah. That's right.
And then that's the top.
That's very close.
Yes.
So that's because it's green, it's gone down.
That's right.
Green, the open is at the bottom and the close is at the top.
Oh yeah, because of the green ones. The red ones are the ones going down.
He is colourblind. You've got to cut him some slack, isn't you?
Yeah.
That's right, it's a green candlestick, so it means it's a bullish candlestick. It means that the market's risen. But if we didn't colour these candlesticks at all, then we just have a central block in the middle. They'd all be the same, and we wouldn't know whether that was the start point or whether that was the finish point. But because we know the market's risen over that period of time, because it's a green candlestick, we know that the start must be lower than the opening. So the start is there, and the close is up there. Now the wicks, that's all the wicks are, is the top and the price that the market has reached and the lowest price that the market's reached. So although this candle opened up here at approximately 1296.2 and closed at 12368.5, it actually, during the course of that 3-hour period, it did actually come all the way up to there. I can't see it because it's under my buy and sell thing, and it did go all the way down to there, which is 1.2. So that's the way candlesticks work, and it's important that you understand that, because now we're going to talk about candlestick patterns. And candlestick patterns, as I said, form the trigger for you to go, oh, this might be a good point to enter the trade. There are loads and loads of candlestick patterns. Here are just some of them. I'll tell you what my favourites are going to be, and I'll tell you how we actually look at the candlesticks to analyse them. So we've got bullish engulfing, bearish engulfing, harami, dark cover, rising sun, 2 high close, 2 low close, a hammer, a pin, and a doji. All right. So now that you know the way that the market works, goes up and down with each candlestick, I can describe to you each one of these patterns. And what these patterns are, what are you doing?
I'm just noticing the bullish engulging patterns and bearish engulging.
Yeah, I don't know where I got this from. I got this very, very quickly. They're actually called engulfing, not engulging. I don't know where that came from. So now that you know red candlesticks are down, are bearish, and green candlesticks are bullish, what can you tell me about the market here? What's happened? I don't know whether it's an hour time frame or 2-hour time frames. It doesn't really matter, right? But over the time scale that we're looking at, here's 2 candlesticks here. What's happened in this first candlestick?
It went down.
It went down. Yeah, correct. And in the second candlestick,
it went up.
It went up, yeah. It went down a little bit and it went up an awful lot. So the sellers were in control here, and it looked as if it was going down. But then the buyers went, oh, I can't be having this, and it shot up. And this green candlestick, right, shows that there's more power in the buyers than there are in the sellers. So if ever you see a pattern like this, when a market's trending in any way, shape or form, if you see a pattern and you've got the little red one there and the green one there, this would actually be this pattern, this bullish engulfing would be at the bottom of a downtrend. All right, so the market would go, say the market is going, let's have a little look here, the market's going down, 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 where are we? Say the market's going down, 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 down. Right, oh, and here's an example of it here, right? The market's actually shot down here. We started up there, it went down, 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 and we've sort of got a bullish, we've sort of got an engulfing pattern here, because we've got a little bit of sell there, but then all of a sudden, there's a great buy reaction here. So the chances are, right, that from there the market's actually going to continue going up for a short while. Okay, right. So that's what that pattern is. Again, this is a bearish engulfing, so you'd find this at the top after the market's been going up and up and up. Right, you might see this, and if you see this, it's a strong indication that the sellers have taken control. Right, essentially here we've got the buyers taking control over this. Here we've got the sellers taking control. So the market would be going up and up and up. You'd end up with that green candlestick, and you get this huge red candlestick, which is a good indication that the market is actually going to drop.
Right.
All right. I won't cover these because we haven't really got any time, and we won't actually be using them. But I'm going to cover these two here, which are the hammer and the pin, because I think these are brilliant. These are two of my favourites. Now let's have a little look at this. This hammer you normally find at the top of a bullish market. So the market would have risen, and then right at the very top you might get something that looks a little bit like this. Let's see where we're going here.
There's one.
Where's one? Yes, the market's risen up a little bit. Okay, it's gone up and it's gone down, and it's come here. So tell me now, what do you think has happened in the market over this 30-minute period here?
Well, it rose up first.
Yes.
And then it's all come down then.
That's right. Yeah, it's gone up, right? So what's happened here is the buyers have taken control, and at one point this was a completely green candlestick right up into there. But then the sellers decided to sell, so they sold it down to there, and they nearly went all the way down and nearly took it down. So this has gone up. But the sellers have gone, no, it's not going that high. We can't sustain the market at that sort of level. So it's come back down. And it's a similar type of thing you'd find on the when it's actually going, what was that one that we did there? Now, you will find them in ranges and things like that. So it's important to realise that you should sort of only sort of really trade these. If you want to have the best chance of winning, you should only sort of trade these when you see the market going up, and then you see one, or you see the market coming down, only after a little bit of a trend. All right. So
right.
This is what we'd use to actually trigger our trade, as it were. We worked out where which way we were going to trade, and then we would look for an opportunity, and it would be triggered by this. But before we actually entered the trade, we would completely analyse it. And I'll explain how to analyse the trade in a different video, because I think we're just about done for this one.
Yeah, that's brilliant.
That's all right, no problem.
Cheers, Paul.
No problem.
Yeah, perfect. Right then, so that's a few more candlestick patterns then, really, isn't it?
Yeah.
Do those make sense to you? They make sense to you?
Yeah, I think you've got to start it and do it. I can see the principle that Paul has told us about, but yeah.
It's the same as everything else, Paul, I think. You know, the more you do it, it's like riding a bike. The more you do it, the more you see it.
Yeah.
And all of these patterns and trend lines and everything, they are only good indications, right? They're never 100%. And what happens, you learn your markets, you learn the actual the graphs, and you get a feel for how the market works. As I said, like riding a bike, you know, at first you know the theory behind it, you've got to stay balanced, but it's only actually doing it and practicing it that you can actually do.
Exactly.
And what might be a good idea for you, just before I dash off completely, is you can get what they call paper trading platforms. So before you actually, have you opened your account yet?
I've opened up the account, yeah, but
Right.
I haven't got nothing, you know, I haven't done anything.
Well, before we actually start trading on that account, it might be a good idea for you to have a little go on a paper trading site. Essentially, it's exactly the same. They use all the figures, they use all the graphs, exactly the same as we did, so you can analyse it in whatever way. However, you don't need to fork out your money to do it. It's more of a game. Completely different psychological concept than when you actually come to use your real money. But it may be handy
It gives
for
you
you.
a good idea.
Yeah.
I'll try that then. Cheers, Paul.
That's all right, no problem. See you next
See
time.
you next time.
Alright then, before you go guys, if you can, leave a like on the video, leave a comment, let us know what you want to hear about, if you've got any suggestions for future videos, and as usual, if you haven't already, please subscribe down the bottom and click the little bell icon. That way it'll tell you when our videos are being uploaded. Thanks for watching, but for now, goodbye from me. Goodbye from me.
Bye.